Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures, here to talk to you about commodities, the grain markets in particular. The corn market. Okay, we started out, we planted the first 50% of the corn crop really good, and then it got really, really wet in the corn belt. Weather is improving, and you should see the corn finish up planting here in the next 3, 4, 5 days. And then perhaps 1 to 2 million acres from corn into soybeans will shift. We'll see about that with this gigantic rally that we've seen in soybeans. Crop conditions when they start out here, the good to excellent in corn is not going to impress anybody. This freeze we just went through nipped the corn a little bit, but that's not a big deal. What's important is to get all of this corn planted and in the ground. The soybean market, okay, what a gigantic rally that we've had. And $2 rally, and keep in mind the last 2 summers the rallies have been 60 to 80 cents, and here we rallied $2. Soybean meal is the key. It's up strong today. There's not a shortage of soybean meal in the world, and yet it continues to rally. So this is impressive. Vietnam is the biggest soybean meal out of Asia, and they're stuck on some purchases. So when you get rallies like this in soybean meal, there's short covering involved. So there's some major countries out there who are stuck on purchases of soybean meal. Remember last week I said we just had a torrid rally in soybean meal, 86,000 contracts traded in the last 4 weeks. A lot of this is short covering. So veteran grain traders will tell you these bull markets will last until the last short gets out of the market. Also, veteran grain traders will mention to you in the 1970s and the 1980s, bullish soybean markets ended in May. Is that a guarantee? Absolutely not. But sell in May and go away, it's worth mentioning today. So going forward, we've had a strong rally in the dollar this week on the Fed raising interest rates perhaps in June. And the Fed governors have been traveling our great country and the world telling us that they're going to raise interest rates. So nobody should be surprised. However, the dollar is sharply higher. That makes commodities go lower. And the euro currency is sharply lower. So it's not the end of the month yet, but you're working on monthly reversals up in the dollar and monthly reversals down in the euro currency, and that's rare. So a week from Monday is the end of the month, and where the dollar closes, if it closes to the extreme high, that's going to weigh on commodities here in the short term. But most important, trumping any rally in the dollar that the Fed is going to induce is the Midwest summer weather, and it is improving as we speak. Everybody have an excellent weekend. Futures and options on futures may involve substantial risk and may not be suitable for all investors.